Hello everyone, welcome to the PivotBoss Monthly Market Outlook for January 2023. This is the first monthly market outlook of the year and for Q1 of 2023. Very excited to be back. We missed a couple of months there to end the year, so looking forward to refreshing our lists and getting going here to begin the year. Again, thank you very much for joining me. My name is Frank Ochoa, also known as Pivot Boss. I am the author of the book Secrets of a Pivot Boss, and also run Pivot Boss and Pivot Boss Masters, and in the trading room here every day with our traders in the EchoFin Pivot Boss room. And for the most part here, this year has begun in a compression fashion with a little bit of directional bias, but really the big moves have yet to become reality here just yet. I mean, this market looks like it's waiting on information, perhaps inflation data on Thursday, that could begin to kickstart a move to begin the year in the broader market. Now, there are stocks that are moving this way and that right now. We'll get to those. But the focus here today will be kind of bringing us back to a framework of what the broader market is doing right now and what could happen in the month and the 3 months ahead, throughout the rest of January and heading into the end of Q1. We're going to look at various futures markets, the ES, the NQ, and those markets, in addition to things like crude oil, gold, and even Bitcoin and Ethereum. We're also going to look at several of the big stocks, the Teslas, the Apples, Amazons, types of the stocks that can tend to give us some leadership clarity. And then we're also going to look at various industry groups that could be in vogue, go on the upside, and also those that continue to see weakness on the downside. So we're going to look at various industry groups that are good for this market, especially as the market continues to ponder potential recession here later on this year. So with that said, we're going to look at some short-term candidates, some longer-term candidates. There's a lot of charts to get to, so I'm going to go kind of quickly. This is being recorded, so I will have this posted as soon as possible later today so that you can review those candidates. As always, if you have anything you'd like me to take a look at, please type it in the chat and I'll get to it when appropriate. So with that said, we're going to go ahead and get started with our Pivot Boss Monthly Market Outlook for January 2023. Number one, what we're going to do here is we're going to use Visual Trader here to help us with some of our industry group work and some of the stocks within those groups. But before we do that, we're going to actually take a look at the broader futures here in Thinkorswim for now. And we're going to start with the ES. We're just going to do a quick review again of the levels to watch, the framework that we're currently using, and where the short-term directional conviction could be and where we could be headed throughout the rest of the quarter. As of right now, we still remain within a very clear downtrending channel. This channel here, very clearly evident, and has been in play really since Q4 of 2021. So we've had, perhaps 15 good months of channeling behavior to the downside. 12 last year plus the final 3 of 21. And as of right now, it doesn't appear as though we're going to change the pattern of this trend just yet. What I have up right now are the quarterly pivots. These are the quarterly pivots, so it's basically using the previous high, low, and close data from the prior quarter to give us the pivots for Q1 of 2023. The quarterly pivots have been phenomenal, especially over the prior year. Much of what you'll see is a rejection at one edge that leads you to the mid and perhaps across the range, and then you watch the edges for a rejection here. We've seen quite a bit of action at these edges, which have given us good moves here quarter over quarter. Right now, we're seeing that the price of this quarter closed, or the prior quarter closed, right around the midpoint of the quarter. And when that relationship develops, it's almost, you're either going to go to this edge or this edge. It's very simple. It's one of those two extremes. It's not just going to sit here and trade in the middle forever. it's got to move to and fro. As of right now, we have narrow ranges that have developed over the last couple of weeks, jockeying for some position here at the upper end of the range of that. But if we start to get a breakout from this narrow range, it could trigger a move over the next 2 to 3 weeks that could take us to an extreme. It could take us either to the upper extreme here, or it can take us to the lower extreme. This 13-day narrow range measures out to have the amount of energy of about 350 points. Perhaps as much as 400 points, but at least 300 to 350 points of potential movement. And again, right now we're at 3,900. If we were to move to the upside, we could get 42. From 39, if we drop to the downside, we can get somewhere between 3,500 and 3,550. So it's an easy equidistant target one way or another. As of right now, we're still trending down, but we have a short-term move that's playing out to the upside. So if you're looking at what tomorrow may bring, as of right now, we have a bullish close today, closed above today's midpoint, and you have a lower value relationship from yesterday with a bullish bias. So if you're just looking for day over day what might happen early tomorrow, we're looking at early weakness followed by bulls defending that morning pullback for a continuation up on the day to close higher, and then we may see this thing go sideways into the close as the market anticipates inflation data on Thursday and initial jobless claims as well. So 1 hour prior to the RTH Open, we'll get that data on Thursday. Thursday could be a big high range day, which kicks off some movement here. As of right now, big time bullish failed new low here, holding the 8-period pivot-based EMA there, which is a very important pivot, rallies and holds right at the midpoint. So any early strength could be bought for a continuation up. There could be about 50 points of range tomorrow for the ES. So if you find the morning low, forecast higher 50 points, you likely get there. So that's the short-term idea. The more medium term here is this 13-day narrow range, 350 to 400 points of range. If price can push to the upside, say it breaks to 39.75, it has a good shot to go retest the previous quarter's high. If that happens, the expectation would be to watch for a failure that leads us back to break even on the year. Again, we're in a downtrending market. The Fed remains determined to tackle inflation, which means continued hawkish policy. And until that changes, we're still trending lower for all intents and purposes. So as of right now, if we were to see a surprise rally, I would expect a move to the edge, followed by what could be a reaction and a return back down. Now, if we are to see a break to the downside, say inflation data comes out and it is data that suggests that the Fed will continue their hawkish policy, then we may see a big sell-off that occurs. And that could take us to this edge, right? So one of the edges or the other. At that point, again, I'd be looking for failure here below 3,500 for a snapback to this range. So when you kind of break it down, you know, we're in this larger trading range here. Right now we're at the center of the range. Which way are we going to go for first, up or down? And when we get there, we likely reject and fade back to where we came from. That is the general expectation as of right now, and makes it difficult when you're kind of at the center of the range. Much easier or a little bit more clarity when you're at an edge and you're expecting rejection. But right now we're not at an edge, so we'll see which way we go out of this range. One last thing here, if you're looking for larger or more broad market structure levels, the big levels here are every 400 points. That's basically the levels right now. So every 400 points, starting at 3,400, 3,800, 4,200, and 3,600. Those are the major distributions right now. It traded a little bit above here and failed, then traded all in here, which is where it came from, and then it traded down in this distribution, tried to get up here and failed. And so if we do fail at 3,800 this next time, there's a shot to reach 3,400, and again, as we say, There could be a bounce right back up, and you stay between 34 and 38 for a while. So that is the, if I had to have the crystal ball there and say which plan are we likely to do, it's hard not to see this thing dropping again and going and testing that edge and then bouncing back higher within the channel. But we'll see how the market responds to inflation, and again, if we make that move to the upside, could be a great little short-term move followed by a fade back within the range. So that's kind of the framework right there. Now, if you're looking at a broader time frame here, the weekly chart, man, it still looks as though more downside could be ahead. Fundamentally speaking, things haven't really changed. Perhaps, we continue to see signs that the economy could head into recession. We'll see how that plays out. But when you see a prolonged pullback of this nature over time, there's not many times you can point to over the last 20 plus years, but you have the dot-com bust, you have the 07-08 financial crisis, and now you have this. And each time you had a period of time here that was building, pulling back, but also it was a slow, gradual pullback. And then you saw the holy crap sell-off that happens. We haven't had that capitulation phase yet to help signal a bottom. And so we could continue in this churning fashion until we see some kind of, oh no, sell-off that is then too cheap and has to be responded with. So we still look like there is that possibility that could be at play up ahead. And that's really until this market can establish some sort of acceptance above 4,200. Until then, clean market structure down with a shot to see 3,400 soon. And then below 3,400, 400 points down puts you right at 3,000. 3,000, if we still see, Q1 and Q2 go much in the way of last year, which is it couldn't really get going to the upside. It was seeing primary moves to the downside. Then 3,000 could ultimately be where we see this market go to at some point this year. That also lines up very closely with key range analysis. So this impulse high to this impulse low, that gives us this key range. And when you use that range, the 100% target puts you at 30,000 at 3,075, which is just above 3K even. So that would take us back through this narrow channel here for trading. So that would be kind of worst case scenario here, I guess, if you're a bull, is that there may still be more downside ahead, not only to new lows soon, but over time we still may work our way toward 3,000 at some point this year before some sort of reaction occurs. So those are just some thoughts, again, as a framework to use moving forward. We still have a downward bias. We're still seeing opposite ends here, the counter trend edges be rejected, and we're not seeing the type of initiative buying that would suggest a change of that bias just yet. The YM has been much stronger than the ES, but this too has been responding to an upper edge. This is the weekly time frame, and you have 35K right here, big time level, 35,250 a big time level, and it has been offered ever since the beginning of last year. Right now sitting just above 33.8, but you're in this range right here. Still a hard rejection here with, again, the potential to fail through these lows. If so, you start opening up a bit of a return that could take you downward toward that September FOMC key level. That'd be about 31K. So the way that this thing is building right now, if there is a failure here, if there happen to fail sooner than later, there could be multiple weeks that takes us back down the market structure toward 31K. But there are several things in the Dow, several constituents there that continue to do well, but not everything. There's still the tech components are still doing quite bad, so we'll see how that develops as well. From a tech perspective, tech continues to be beaten down. It continues to show weakness overall. Some of the biggest stocks out there are no longer some of the biggest stocks, or they've gotten big haircuts over the last year. The Teslas of the world, Metas dropping 60+% each, and things of that nature. And you can see how close to the low of the year this thing finished, the NASDAQ that is. Still a heavy downtrending channel in play, and we're sitting right on these lows with the potential to go another rotation to the downside. Again, just using the key ranges that we established last year from here to here. That range points to here as a target. That takes you to about 9,200 as a potential target to the downside if these lows get taken out sooner than later. So again, nothing really to suggest a change in overall trend right now of the broader market. So those are a few of these markets that continue to look weak until something changes. From a one-day perspective or a 1-week perspective, sure, there could be some strength, perhaps as high as the previous quarter's close, or a high rather. But if that happens, man, do we get another hard rejection as we've seen multiple times up here after rallies. So for tomorrow, again, short-term perspective, failed new low, a close above the midpoint, close above today's mid. Early pullback could be seen for strength. Tomorrow could be a 200-point day. So if you find the morning low, say it's 11.2, add 200, and you get to about 11.4. That could be a decent day ahead of inflation data. Now, let's get to something a little bit more bullish, and that is gold. Gold has been super bullish in the final quarter and also to begin this year. This triple bottom down here, a rare triple bottom with a squat bar and a massive squeeze day that reclaimed market structure above 1680. All of that played out tremendously. Narrow range day, outside day up, narrow range day, massive break. This thing really pushed to the upside. That was the initial phase that triggered the beginning of this rally, and it has been churning higher ever since. We noticed a pattern here in December of heavy pullbacks followed by bounces. Heavy pullback, bounce. This was a buy opportunity after that day, and it bounced. This one we talked about the same thing, bounced the next day. So it just shows how bullish this market is right now. It has reclaimed some major levels here, one of which is that 1830 level. 1830 was where this market finished the year, 1829.90, and it's also where it finished the year the prior year. So that's kind of a 2-year previous year close, 1830. And that's why on this squeeze here, we mentioned that in the best case scenario, this thing could squeeze all the way as high as 1830. Market structure wise, it held. This was the range, and it did it great. So now we're here to push through 1830 the way it has. We mentioned before that 1880 would be the short-term target, and now we can hang out in here with an upward bias. And if you can get above 1880, 1900, it puts you back into the 1900 to 2000 distribution, where more strength could be seen up to that point. And then maybe it pulls back and you hang out here. But the next 100-point distribution could be between 1900 and 2000 for gold. Very, very strong market. It has one of the best trends, like the most intense bullish trend that we've seen over a multi-month period. And what that means is every pullback is a buying opportunity until proven otherwise. At some point, it may mark the top by giving us a strong rejection day and a hard pullback that gives us the potential for a key range development at those highs where it can digest the recent price action. But as of right now, it's still trending up, and pullbacks are buying opportunities. If we do see a pullback, could be a day-long trend, and then you look to fade it for the prior day, or the next day rather. So very, very strong trend. Gold is back in vogue. It was to begin last year, overshot itself. Once that rejection occurred at 2000, it was a steady decline back to 1620. That's a massive, massive move of nearly 400 points. But 1620 came in as major support, pushed this thing back up, and we're now on the road back higher. So 1960 could be a very doable target. It's been a key level for this market for a while. So gold remains very bullish right now, and buying the dips seems the best way to go. Gold stocks we'll talk about later on, also in play in addition to their respective ETFs. So very solid there with regards to gold. Let's switch gears here to crude oil. Crude oil has been trending downward. It had perhaps the most bearish two-day start to the year of many of these commodities. Big time sell-off, and since then really hasn't gotten going to the upside. Very narrow 4-day range here. We have crude oil inventories coming out tomorrow, Wednesday, and again, that could provide a little bit of volatility here, but this thing remains. This is almost like gold in that after that major rally that coincided with the invasion of Ukraine, you had that sharp top, and ever since that sharp top, it's been down ever since. We're coming into a point where this thing has developed quite the wedge down here in compression, and the next move is likely a market structure move, which means it either needs to break to the upside and rally back toward 94, between 82.5 and 94, or it needs to drop lower out of this market structure and create the next range below. A drop would likely coincide with a move back toward the 66 level, 67, 60. That's 63s. So you have value right here at about 63 and change. You know, you're dropping into that point, and then you have 58.86 as the 100% target from this key range. So you got that key range. If it's going to give up the bottom edge, you may have a move that takes you 67.55 and 58.86 down below. So that's going to be something to watch out for crude oil. Again, not really showing any kind of strength here as of right now, but this is a fluid situation. You never know. Headline risk can push this thing up in a jiffy. You know, OPEC can say something, whatever the case is. But in terms of pivots, previous quarter's close, previous quarter's midpoint, so you're at the middle of the range. You're either going to make the move up or you're going to make the move down to go test the edge. We're hanging out in midair. It kind of feels like we need to go get that edge, and then maybe there's a relief bounce that can happen after that. So narrow 4-day range, perhaps some volatility coming here, especially with crude oil inventories coming up. But directionally speaking, still a bearish bias overall. Let's take a look at Bitcoin. Is this the year where Bitcoin and Ethereum make a comeback? And if so, how much of a comeback? You know, depending on what you read and who you talk to and, you know, who you see on television, I've seen anything anywhere up to 250,000 for the year down to, you know, negative. I've literally heard negative. So the opinions are super far and wide spaced apart here in terms of what that move could be. You know, last year clearly a risk-off environment. Fed really put a damper on that back in the Q4 prior to that. We saw a major capitulation here and continuation to the downside. It's held. I do believe that we see a crypto bounce, but it could be very moderate, but it could be decent at the same time. I'm not expecting this thing to just, you know, somehow find itself back above 50 grand and rallying by the end of the year. But you know what is doable is 30,000. I think 30,000 is very doable. And, you know, from around where this thing finished, 16K, just to get to that 30K edge would be, you know, nearly a double. So there's definitely a fruitful bounce that could be in play. There could be even just a bounce as moderate as finishing value for last year. The last time price tested value was here, it was chopping around flat value for the year, then took it offered. At times there's a tendency to go snap back to that level. That's about 26K, which again is about 9 grand from where we are. So there are potential moves to be made here to the upside. If you just want to be very short term about it, the market structure to continue to watch is basically 18K. That's the level. Above 18K, you got 21 and you got 25, and those are the big levels. You can see this kind of rising wedge that's playing out, a little bit of build up, a little bit of strength happening. If you can get above 18K, you got 21 very quickly, maybe sideways, with a shot to maybe do something like this, and you get up here into this edge. Even if that's as high as it goes for the year, that could be still a decent move to the upside. So do I think all crypto is going to rally? Do I think these altcoins are going to make spectacular comebacks? No, I don't think that at all. I think the bigs are the ones designed to kind of survive if they can here, like the Bitcoin and Ethereum. And then I think some stocks that piggyback on that will also see kind of a rising tide lifting those boats. And we'll talk some more about those stocks to watch. Coin would be one of them as well. So there is some potential here, I would say, from a short-term, very short-term perspective. Above 18 gives you 21. If we see a rejection at 18, though, I mean, something where it really rejects, then how far do we go to the downside next? I think to start the year so far, taking the previous close bid right away and then just going straight up, leaving behind the low, I think that's a very positive move. The previous quarter's midpoint, though, isn't too much above. So, I mean, that's the level at which the pivot here either opens the door to the upside or you reject and drop back down. So 18K, the big level here in Bitcoin. But beyond Bitcoin, Ethereum has been even stronger, probably looks the part a little bit more. In terms of how high this one can go, again, it wouldn't surprise me if this thing can get back to 2,000. Again, even if it's just a short-term move and price drops thereafter, the move still could play out. And the best case scenario, and right now BTC and ETH are both at the same zone. Previous quarter's midpoint is right there. It opens the door to what could be a test at 1650, and then beyond that as high as 2,000. So that opens the door here. But man, again, if this thing can't get going to the upside here, like the 18K level in Bitcoin, then where do we go? You got to go retest the low. 1,000 has been just massive support. It's been so significant, but at the same time, there's a potential to see some sort of flash move through it, even if it ultimately bounces. I would say the previous year's low right here, which is 1,000. If it's tested or prices below there are tested at some point this year, it would be hard not to watch for a rejection of those prices and ultimately look for this thing to snap back to the upside. So if you had to be patient, if you want to be patient, 900, 800, where is that move go to before it rejects? Because if you get 900 and this thing snaps back up to the other side of the range, I mean, again, you're getting very favorable percentage returns. But again, be cautious on this one right now. It is at very important levels, which could give you some short-term movement. And as always, you don't have to trade the actual coins or the futures. BITO would be a way to play Bitcoin, and I believe there's also options in this one. Some of them don't have options. This one does have options, so you can actually engage the options market in BITO. ETHE would be another one, although I don't believe that one has options, but ETHE would be a good proxy for Ethereum. And you can see right now a nice little rejection on the lows and moving higher right now. So those are some good ones here that could be used as proxies for ETH and BTC. Now, let's take a look at some of the big stocks here, because some of these big stocks, let's take a look at Apple first. They've been beaten down in big fashion. I mean, you haven't seen a bully go down like this in a very long time. Those big stocks that just continue to beat everybody out over and over, the Amazons, the Apples, the Googles, Netflix, all those folks just crushing. But last year was very unforgiving. Massive collapses late in the year, closing near the lows of the year, and that provides an opportunity. So if you look at these charts, one thing you want to do here early in January is look at which charts close near the low of the year. These are quarterly pivots, but that is also the close of the year, and this is also the low of the year, so they double in this case. Those stocks that are going to be rejecting these two edges, or these two levels at this edge, the play is usually for a snapback to the previous quarter's midpoint. And and we're going to see a lot of these stocks right now as we continue to go through, but there is some very good market structure here that could pave the way to some nice bounces up ahead. So if you look at, like, say 132.5 as support, prior support, now it's resistance, you're seeing a rejection of the previous year's low, a rejection here, or at least prices rejecting back below it today and pushing back above it. Previous close, failed new low today. Can this thing push back above 132.5? If so, it could be a transitional move back into this range right here. So it's below it right now. If it can push back above and transition 132, there's a shot to work your way higher up the range, perhaps even back to closing value. So this one right now, weighing down the tech heavy index, closing near the lows of the year, pushing through those lows in the first 4 trading days of the year, but coming back with a nice squeeze on jobs data. We now have a failed new low developing today, close to pushing through the midpoint of that tail event, which would open up highs above it. So this is an early indication of what could be an opportunity to push higher. Again, given the overall downtrend of many of these stocks, even if we bounce, that could be a short-term move that you take part in, but at the same time take profits, because once it does bounce, there could be a very good shot that this thing makes another major primary move to the downside. So short-term, Apple not looking bad at this edge. It's been weighing things down, but can it get above 132.5? Can it get above 133? If so, there might be some upside up ahead. So that could be a good one here to keep an eye on from that perspective. You look at something like Tesla, though, man, oh man, this one's looking bad. It has this whole group. We'll look at some more candidates in this group. But this group right now, EV automakers, smacked in the mouth last year, closed on lows. This one lost 69% of his value. Elon lost $200 billion of his net worth in 1 year. Sold 4 different times last year to the tune of 20+ billion. So it really weighed things down. Is this going to be a comeback year for Tesla? If you look down here, it has a very similar look and feel to Apple right now. Trading below the previous year's low the first 4 days, squeezing, failed new low today and holding, still below the previous close. But I mean, you can see the potential for what could be a squeeze. But look at how aggressive this down move has been. Look at how aggressive the bearish Pima trigger zone has been. We're inside of it now. Again, because price closed the quarter and the year near the low, there's a tendency to look for a rejection that could maybe get you as high as the midpoint for the quarter. That's well above 180 there, and we're at 118. So you could see the potential, but man, it doesn't look the best here at all. And when you look at this thing from a weekly chart perspective, One of the levels I pointed out a while back was 70. 70 right here. One of the things we mentioned as this thing was approaching 140 was Tesla doesn't want to break 140, because if it does, there's the potential for a 50% haircut still to 70. And we're working our way perhaps to that level. 70 is a major CLV in the charts. It's the initial breakout day way back here in 2020 that opened up that crazy rally where this thing moved way up there. Obviously it split a couple of times since then, right? Twice, 5 for 1, then 3 for 1. So major moves. So below 140, that's kind of the level. If it can't get above 140, then maybe the next move is to go find that LVN. I think prices or those prices could be too good to pass up for some market participants. 70 again, 70 back to the breakdown point of 140 is your double. If you can reestablish above 140, you still have the 180 level, and then beyond that, how far does it go? So right now, again, not anticipating this thing to go way back over here, but 180 could be a very doable long-term target this year. What if this thing goes to 90 or 80, doesn't quite get to 70? It's still a great potential return there. So right now it doesn't look the best. It is responding to an edge. 70 is a big time CLVN. That's the one to watch. 70 also is the S25 of the quarterly pivots. When you have wide pivots, the S25 is the best ambush entry that there could be usually. So when this thing drops into it, it's usually a really good first test bouncer. 70 is going to be the big level here. I know we're still way off that level, and we may not get there, but that's going to be a good long-term level for you all to follow if you like some Tesla. So right now, again, very bearish trend. I don't see this one really recovering significantly right away, but 180 could be a great target at some point later this year. We'll see if we need a strong rejection down below first. Another one here has been Amazon. That one, again, big time sell-off last year, big drop here to finish the year on the low of the year again. So naturally, to test that low, there's an inclination here to go long, buy it, and see that snapback come to life. We're seeing some of that play out. If it plays out nicely enough, again, the midpoint of the previous quarter is a very good short-term swing target. That's also the 100 level. So whenever this thing's able to get back above 100, you open up 120, 125, previous quarter's high, and falling value. Actually not falling anymore. That's finishing value for last year. So there is the potential, again, but this one looks just like Apple does and Tesla, where it's trying to find some strength here in a very bearish dominant downtrend, which again, in order to break a trend like that, at times you need significant rejection on one edge first. So we'll see how that continues to develop there. You look at something like Netflix. This is one that I've liked. Of all those FANG stocks that we could talk about, which we already looked at several, this is one that we actually had as a buy opportunity in the second half of last year, and it was all because of this narrow range and the push back through the top of that range that was developing, and mentioned at the time that if it can just hold the top edge of that range, there's a shot to go all the way and fill this gap at 350. Or reach the bottom of that range, 340, right there, right? That was the target. Well, it didn't get it right away. Instead, it went sideways a whole nother quarter, then broke and continues to push higher, and got super close to that 340 here. So it's made its move. So look at this thing here. It went from market structure down here, then higher market structure here, and then higher market structure here, and is now very close to recovering the 340 edge, which would put you into 400 territory if you can reclaim that area. So of anything we've seen, this is one that actually is doing quite well. It's had a directionally bullish trend, sideways to up, and above 340 opens up 400 for this one up ahead. We'll see if it can make that transition at some time sooner than later. Let's take a look at some groups right now. So we talked about, let's look at the EV automakers. If you want some stocks to sell here, these are groups that aren't doing quite well. You have Tesla obviously as the big leader here, going down. If I just click on the EV automakers composite chart, this is all of those stocks that are in this group that I put in there, and they're all combined to create this one chart. So we are at a counter trend edge, or the primary trend edge, which means there could be a counter trend bounce that happens, and that's what we're talking about here. There could be a little bit of strength, but if so, any strength likely to be sold. So if we see any bounce out of some of these, it could be an opportunity to sell. You look at things like Tesla again, trending down. You're looking at things like Rivian, which recently broke down through this support level here, about 27, 28. That opened up some weakness. For example, if this thing can get above this pivot low right here, say 20, there could be a failure, and then you rotate another leg down. So some of these, again, not looking their best here. You have the Chinese stocks here. This one's barely hanging on, but has a shot to break as well to the downside. You have Li Auto, again, barely hanging on overall compared to some of the others, but just not the strongest group right now. So this is one of these groups here that continues to see supply chain issues and all kinds of issues, and it's already a difficult space without any of that those headwinds. So again, any bounce out of these could be an opportunity to sell until proven otherwise. Airlines. We talked about airlines a little bit earlier today. The airline stocks, let's take a look here. These have started the month very, very strong. This is a composite look at the airlines. First day down, and then the last 5 days straight up. A big time move. And when you look at the constituents of this this group, you can see a ton of strength. Bang, bang, here across the way. All of these very good moves. I guess the only one that's not is Spirit, and we all know why probably on that one. That one just doesn't do it. But despite this strength, is this strength going to lead to a rejection and a turn back down? Right now, again, some of the industry groups we're looking at will be recession friendly. I tried to say recession friendly groups, things like consumer staples or healthcare, drug manufacturers, fast service restaurants, auto parts retailers. Those, the gold, things of that nature, discount retailers. And then, because again, you see consumers make a switch to what's important, right? You have to buy your drugs, you got to have your health care, got to have your toothpaste. But you don't necessarily need to take that extra flight to wherever with your family. So it's going to be interesting to see if this first move of the year is one of those gotcha moves where they rally it to the upside and then a rejection occurs and you start to see some sort of a failure, back down. This is going to be interesting. So DAL here is it's probably the most bullish here at the moment. It has seen a transition above 36, had been trading 32 to 36, and then before that was down here at about 28 to 32. 4-point increments here. 40 would be the next target above, 44 beyond that. So this one's showing some strength here through that level, but a failure to hold 36s rotates you right back to value and takes you right back where you came from. So any failure to hold 36 could be an opportunity down. Holding 36 gives you 40 up above. So 36, the big level here to watch for this one. Another one here was AAL. Again, you can see the bullish start that this one has had to begin the year. This one is traded precisely to the previous quarter's high price right there, just shy of final yearly VWAP. And you're inside this range here. Very, very mature range that has been 6 months in the making, now more. Again, watching this edge here. Do we see a reaction at this edge that brings you back to value below? Or does this thing see a transition phase that takes us much higher? The next level up in this case would be 18. So this is 3-point increments on this one. But the tendency here is if you have a bearish group and you're testing resistance, you look to fade back toward value below. So this might be a group here that could be looking at rejection at an edge. But if it pushes through that edge, you got more upside to the next market structure levels above. Another one of those stocks here is, did I do DAL already? Oops, DAL. Or was it UAO? What's going on over here? Let's grab that again. There it is, Delta. Oh yeah, I did that one. So UAO would be the next one. Looks like I'm breaking Thinkorswim here. UAO would be the next one. So UAL coming up to the previous quarter's high as well. Remember, this one closed near the center of the quarter, kind of like what we mentioned earlier. You're either going to make a move to this side or you're going to make a move to this side. And if you do make that move up, you reject likely and you come back to where you came from in many cases. So again, watching that edge for a potential fade opportunity. Now, there are several groups that are doing quite well. If you look at something like the gold group, well, gold as a whole here has been turning higher. Remember, Q4 for GC was very strong. And you can see how, as a group, this thing had a very strong Q4 and has started the year well as well. With gold, many different stocks that are in the gold space, but a lot of times you could go. It's hard to go wrong with GLD. GLD very strong here overall, and looks a lot like that composite. You had this breakdown here, and you've rallied now. That's your triple bottom down here. So you've seen quite a bit of strength. Maybe we're coming into some resistance here, which might bring us back down, but the trend is still up. Above 175, opens up 185. That's basically the 1900 to 2000 type of target that we had on GC. Another one here would be GDX. That's the miners, gold miners. Trades a little differently than GLD, but you can see the pattern here is still very much the same as this thing continues to trend up. So those are very good instruments here that in this uptrending market, anytime you see weakness, 1 or 2 or 3 days of weakness, a pullback, it could be an opportunity to pick it up cheaper and look for a swing move up. So that's the idea with some of these. If you wanted to pick an actual stock, AU's been very strong. This thing's rallied from 12 to 22 here recently, and looks very similar to GC, GLD, GDX. They all, looks very much in line with those other candidates. And then you can also go actual GOLD, which is Randgold. Strong rejection on the low, overcame resistance at about 1650 and working higher. Again, pullback could be bought in this one. So gold could have a very strong first quarter of the year following last quarter's strength. Sideways to up is good as well, and some of these other stocks could follow suit. Crypto, looking in the crypto space again, if ETH goes up or if Bitcoin goes up, there's a tendency to take some stocks along with it, because again, some of these stocks own these various things, or some of these stocks are miners or whatever the case might be. MicroStrategy here is one that has rallied. They have actually lightened their load of Bitcoin, I believe, for the first time. But what you see right here is an edge that is firmly in play. That edge almost looks like the ETH edge. You have this kind of midline here, and it's made a really good early move. Again, not expecting this thing to be a world beater right now. It's been beat up quite a bit. It has a clear upper trend line. But it will be interesting to see if we can get above 200, 210, because the next level up takes you to about 280 and could be a nice little mover. So when you look at some of these with our pivots, this is where it gets a little interesting, is that because we have such strong reactions to begin the quarter and you're rejecting the close and the low, you have directional conviction to the midpoint, and then who knows, if it pushes through the mid, you open up the previous high. So there could be enough juice to get you to that upper level. This is 290 even, and right now we're at 190. I know it sounds crazy, but is there a plus 100 up ahead? Maybe not. Maybe not, but this level does look very good. That's your 211. So from 190, there could still be 20 points up ahead. And if it gets through 211, then you have some potential to get up to these upper key levels. So, crazier things have happened here, but a little bit of a rally to begin the year here, and something that's so beaten up could be in play. Another one is Riot Blockchain. Again, another one that these are very short-term opportunities that could have a little bit of tailwinds, right, in the form of ETH and BTC rallying. So look at the strength here. Look at the previous year's low and close going bid. We're now above last quarter's midpoint. This is 6 days into the year, and we're above that midpoint. So if it can find acceptance above that mid, you open up this level here, the previous quarter's high. That could be about 775 up ahead. So, there could be some initial follow through. Now, the other thing I like about these, not just these, just this pattern that we're going to see in several of these stocks, is these prior lows right here were set, they were firm, and then price traded and dropped below them and traded for a couple of weeks, and then it was able to recapture those prices at $4. So to reclaim that edge would suggest a move to the next edge, and that puts you again right about here. So you're looking at $7.75 to about $8. That could be a target up ahead. Even, as I mentioned, even if that move ultimately fizzles and you go to new lows, this move could still be there, and that's a decent decent move on an intraday basis. Now, Coinbase, this one, now that we just looked at that one, has the potential to do just that. If you look right here, there's your strong lows, market structure lows, and then price trades below it. Right now, we have not seen this thing reclaim those lows just yet, but you see the strength that Coinbase is getting right now. Can it get above 45? If it can get above 45, there's a shot to come back to value. You got finishing VWAP here at around 60. You got 68 CVWAP, and then you got the top, or CVPOC, and then you got the top of the range here at about 78. So that's a fairly solid move. That'd be about another 25, 35 points of strength. 35 points if we can get to the edge, and we're at 43 right now. So again, maybe that's a long shot, but with the way that we're seeing strength early on this year for this space, there could be some sort of relief rally that gets you up to 55. That's the midpoint of last quarter, and maybe value. So 55 to 60 could be a solid move in this one. But you'd like to see price get above 45s first. Can it get above 45 and find that day through that zone? If so, now you have this upper market structure to work with. So that's where, again, some of these are looking a little exciting from a short-term perspective if they can recover that market structure support. I guess Marathon would be in this list as well. Marathon, another one of those crypto stocks. And you can see right here breaking back above these pivot lows right now, perhaps it opens up a little bit of strength back up toward 9 or 10 bucks. Right now trading 575. Again, you know, got to be careful in this group because it has been smacked after strength, and we haven't really seen the biggest or strongest rejection on the lows yet, which means even if we rally, more lows could be ahead until we do find that rejection. So be cautious in this group. Another one here, though, that may not need too much caution here is, for example, again, when you're talking recession stocks, you know, there's many ways you can go, but things like discount retailers, right? If folks are looking for their money to go a little longer here, instead of shopping at the, you know, I don't know, insert high price retailer, they'll go to a discount retailer, something like a Dollar Tree. Dollar Tree, Costco, Five Below, Walmart. Those are several stocks here that could be in play. When you look at the discount retailers over here, just as a group, you'll notice they haven't quite done great in the prior year, but they do appear to be building energy collectively for some movement to come. So it looks like these are primed for some movement. You look at the whole list here, there's several of them, you know, and they're all a little different, so their charts aren't going to be smack on. But some of these are looking up compared to others. Big lots, you know, overcoming that 15 market structure, looking solid. So there are some good opportunities that could be here. Dollar Tree's one of them. And again, kind of like what we've seen with some of these stocks, this thing's finding some support down here and now finding a failed new low and working its way higher. And if it can just get a little bit higher here, it starts to open up some clear air above, which could take us to a gap fill, or in the best case scenario, back to the previous quarter's high. As of right now, again, a rejection of the previous quarter's close, never tested the low, so that means that this is the primary focus up ahead. Can Dollar Tree go reach the previous quarter's midpoint? That'd be 152.89, so call it 153. 153 could be ahead. The 200-day moving average is right in that zone, so 152.5 to 155 could be an easy upside target up ahead. Again, inflation data on Thursday is going to be huge. If it decides to outside day down these stocks, we got our primary wave down that's coming. Costco, another one here that is bouncing off support. So you have the previous quarter's low and close. You see the rejection here off the 450 level, a massive squeeze on Friday. That was a huge MGR buy signal squeeze, big gap outside the prior 2-week range and rally, and here we are. So holding 450 is really solid. Can this thing make a move back toward 540 or even higher? We're in that trading range right now, and this could be, you know, a pass higher within that range. So Costco could be in play there. You look at something like Walmart. Walmart always keeping up with the Joneses, doing quite well against Costco and Amazon. Has a general uptrend in play right now, kind of at the counter trend edge of that zone, which would mean the next primary move could be to the upside back toward the prior highs. That puts you around 154, 155 on the upper end. Closed the quarter at the center of the quarter, so you're either looking here or you're looking there, right? And right now it's taking that area bid, so focus is to the upside in this one. Five Below would be the last one here we'll look at in this space. Five Below doing quite strong right now. Uptrending market here, and a good follow through after the recent pullback to the upside. So, you know, we're at an edge right now, so maybe there could be a little pullback, but if this thing can push through it, it starts to open up some upside. This thing continues to trend higher as well. So those are some discount retailers that continue to do that could continue to do well in this environment. Drug manufacturers as well. You know, you got, let's take a look over here. So, yeah, right here. Drug manufacturers had a, you know, kind of a pullback here to begin the year a little bit, but some of these have had tremendous trends. So if you look at something like Merck here, didn't mean to say F Merck, unintentional there. Looks like I'm breaking Thinkorswim again. There it is. This one has had a strong Q4. This is a theme we talked about in our trading room as well. If you go back to Q4 of last year, there are some things that outperformed in tremendous fashion. Some of these drug companies did that. You had gold that rallied tremendously. There was others as well. Whatever had the biggest Q4 gains was probably a precursor to what may come a bit into this year. Obviously, we had a little pullback here from the highs. This is one, though, again, that on the pullback, it could be a buying opportunity within the uptrend, but very strong overall. You also have things like mRNA, Moderna. This one is interesting because it has quite a bit of compression built up and could release some significant energy. Significant. So if you look at the yearly bands here, they were way out here, and then they normalized way inward to pinch on the yearly compression. And what that denotes right there is tremendous strength, or at least tremendous buildup of energy that could release a powerful move. And if this thing breaks to the upside, say 220, you start to open up the next 100 handles to 320. So just looking at the general lines here, here's 220, here's 320. That's your prior range. That's your prior range. We're knocking on the door right here, and you have kind of this developing rounded bottom compression pattern that could open up a 100 handle move to the upside sometime down the road. 320 is going to be that level. So that's a long-term idea. Again, from a short-term perspective, working its way up, and through this midpoint at 190, that opens up, you know, the next level above. So a test at 220 could be coming up ahead. So this one could be big, especially when you look at the weekly time frame. When you look at the weekly here, you see how beautiful that rounded bottom is. Can it find a way to see expansion through the top end of that range? Because if so, you have a very good shot to work higher out of that range. So this is a good long-term candidate with that build up. Can it get through 220 down the road? Let's see, Lilly, Eli Lilly. Eli Lilly could be in play as well. It already is in play. It's been trending higher for a while. But look at this trend, and you look at Q1 low last year, and ever since that Q1 low, it has trended higher. It has done quite well. You know, it hasn't all been straight up. You know, this is fine. You get a good push up, you hold those gains, push up, hold those gains, push up, hold those gains. And right now, this extreme reversal that's developing down here, it's one of the signals from my book, Secrets of a Pivot Boss, Chapter 2, Extreme Reversal. That extreme reversal is also happening at the previous month's midpoint, thus a Pivot Boss pivot buy signal. That could be a great opportunity to sling this thing back up in the short term and keep it within this range. Ultimately, you're looking for this thing to break higher. So again, these several stocks in the drug manufacturing group likely to continue to do well in an environment where recession seems like it may come to pass. So people got to buy their drugs. So good strength here that could come out of this extreme reversal right at a key pivot. It could be in the very short term, even if you just play it for the next 1 to 5 days. You're looking at maybe a retest of 350 that can get you squeezing back to the prior close there. That prior close is going to be 365. 365. So a plus 15 to get just back to that zone. That could be a solid little move there. Healthcare. Right? Gotta do healthcare. Humana. I have UNH, I got CAH, those, Cardinal Health, United Health, Humana. And these are at a very interesting spot. Again, look at the trend here from Q1 of last year. It trended higher the rest of the year. And right now, when you have a very well-developed uptrend on a long-term period, anytime you test the previous low of a major quarter, it's an opportunity to watch for a trap and a bounce back up the range we go. So it's not ready yet, but we are below the previous quarter's low. We're coming into an LVN. We just got below the 200 period average. You got finishing yearly VWAP down below. So again, at some point, ideally you get a rejection, and that opens up the potential to snap back up within the range. So this is a good spot to watch for an edge. You're not getting that rejection just yet, but we're there. Same thing with UNH. UNH is at the exact same spot. Right here at the previous quarter's low, right here sitting on, a little LVN bend. Do we get a rejection and snap back to where we came from? Snapping back would put you between 525 and 530. Right now trading 486. So there could be that opportunity. Again, this is not a rejection, so it's not time to say buy and go long. But we could get that rejection or that move soon. Perhaps it coincides with earnings here, which is on January 13th before the market opens. So that could be in play down the road. Another one here is CAH. Cardinal Health, again, a very bullish trend. So if you're looking for something that has actually been going up here, these industry groups that we've been talking about have actually been going up in the prior quarter or perhaps 2 quarters, and in the case of healthcare, ever since Q1 of last year. This one has held gains at these highs, so there's a nice compression here. This is a good key range right there, and eventually we get a breakout that leads to strength. Basically, it's this right now. We're in the middle, and soon you may get that phase that comes up. So at some point, upside could be ahead. For now, weakness, you want to look for rejection to fade it back up if we see some sort of weakness. But this one is another one that could see additional strength ahead. Fast service, right? If you're, again, concerned regarding the recession, you have obviously consumers are going to make their money go a little bit longer. You have things like Starbucks that can do well but also not well. I would say it does well in this environment. Even if somebody's paying a lot for their coffee there, they're also buying other things and hanging out, whatever the case is. This one has still been strong and has done quite well from the May lows last year. We are testing that quarterly high right now, so there could be a bit of a fade back down, but generally speaking, we're trending up. So again, on weakness, this could be an opportunity to buy. During the uptrend, you have things like McDonald's that starts to become popular. And this is something we mentioned at the beginning of last year when things were falling off. We mentioned that McDonald's could be something that actually does quite well. It was able to bounce back, wasn't the best year, but finished Q4 very strong. Now sitting at these highs right now. Not the best pattern at the moment, but part of a group that continues to do well in this environment. You also have things like Yum Pizza, or not Yum Pizza, Yum Brands, which owns various fast food restaurants, and this one holding at the highs, a massive rally in Q4, Holding on to those gains as of right now. Again, compression leads to expansion. Maybe that next phase of expansion gets you to about 140 over the course of a quarter if this thing can make that move. So that's a good one there. One that could be due for some expansion is Papa John's. You know, this one's been out of favor for a long while. Obviously in headlines over time. It's been in various headlines and things of that nature. But all is well right now because Shaq is in the mix. And if Shaq's in the mix, he got to get paid. So at some point here, I think this is a massive accumulation phase before we see a breakout. It's had a very clear downtrend from 140 all the way down to 65. And now you have this compression phase right around the 80, 82 half level. And this looks the part in terms of an explosive potential move coming. And if it breaks to the upside, you could see this thing attempting to make a move for prices above 100. And again, not ready just yet because we're still in the range, but it's building that energy. Again, you look at it like from a weekly chart standpoint, building that energy, kind of an upward bias, you know, with some of the tails we're seeing, but it's definitely has the juice right here, and the move could be about 30 points. You're looking at 65 to about 95 in terms of the size of this range. There could be about a 30-point move up ahead if this thing can get going. So something to watch here. Not quite ready, but a very good accumulation candidate that could be due a move pretty soon. PG, Procter & Gamble has been a good one here as well. So again, in this type of environment, still need your toilet paper and things of that nature. And so we've seen this thing rally tremendously in Q4. Again, another one of those Q4 bullish candidates that kind of tipped the hand to what could be ahead here in the first part of the year this year. Now, after that big rally, you're likely going to see a little bit of range action, which we're seeing. But, you know, after weakness, perhaps a bounce off the 200-day, maybe that next up move comes to life. So this one, a good one to have. The other thing about something like this one is you get dividends as well. So dividends in this environment are great. You know, this one's still putting up dividends quarter over quarter. And that could be a great way to go this year. We also had, what is it, Tyson Food. You know, this one's been beaten up big time. Big time. Price of chicken going through the roof. Those fancy chickens. And now you see this thing holding on the lows. But did we finally find a short-term low? You know, this was a really good lower low failure. And then you see a break back above the previous month's midpoint and back above the previous quarter's midpoint. So to break those two suggests a shift in that directional bias that takes you to the edge. So 69 is the next target above for this one. And man, can it get up through 69? Because that could open up some upside. Otherwise, a rally to 69 might be an opportunity to sell it yet again. So again, right now, looking for the flow to the upside, to the edge, but given the downtrend, maybe this is one that gets faded back down. But looking for a move to 69 to 70 up ahead for this one. Things like beverages, Coca-Cola, Pepsi, could be in vogue as well. Although this one had a very good Q4 right now, just kind of hanging on to the gains, not doing a whole lot right now. And actually looks a bit toppy at the moment here to begin the year. So those are some, you know, some consumer staples that tend to do quite well. Procter & Gamble, General Mills, things of that nature, but not as strong as some of the other ones we've seen here. So several different types of industry groups, a lot of different bullish stocks, but when you look at the broader market, especially when you look at tech, not the easiest right now in those spaces. Still looking for major rejections. I'm going to go through a few more candidates here. These are short-term candidates. Let's look at Oh, this was from yesterday. Already gap down, obviously, on that one. A good failed new high with a sell signal. Gap down here today. Already dropping away from the top end of the range and working its way to the bottom, but today took a massive gap. Already down on that one, so let's pass it up. This one right here is one to keep an eye on. This has been a very bullish candidate. Overall, did very well last year, was a big part of why the Dow outpaced tech, small cap, and things of that nature. But right now we're at the highs. So here's the strong pivot high for the year. Big strong pivot low. One time we were below it and squeezed back above. We're now at the upper end of this range. So, you know, not expecting this thing to just full on break down and drop. But if this thing gives up 410 and this little market structure, you do backfill. You got 375 at value and the 200-day, and maybe there is a little bit of overage to the downside. But we're in the range right now and at resistance. A big time compression. Is this going to break to the upside and extend this thing? Or does it give up 410? This is going to be one to watch from a short-term perspective here on this next move. There are some good stocks here that are doing quite well on a short-term basis and also a swing basis. Crocs is one of them. We had Crocs as a buy candidate right here on that break to the upside, and that coincided with that Netflix buy we had as well that we talked about a little bit earlier. And since then, both of those stocks have been able to form clean market structure moves higher, and it started the year on strength here already. So if you look at this thing, it's been just moving higher. It's holding ground and continuing. This is one that on a short-term basis, any pullback right now is a buying opportunity for a continuation up. On a one-day basis, on a swing basis, if you get 2 or 3 days down into the Pima trigger zone, that could provide strength as well. So this one's a bullish candidate right now that continues to work higher. Pullbacks are a buying opportunity in this one. You have DraftKings. This one might be a little bit of a very, very short-term bounce opportunity followed by nothing the rest of the time. Obviously with the national championship game that happened Monday night, huge victory there for the Georgia Bulldogs, and just a big-time stomping of TCU there. But as we go into the NFL playoffs here, things could lead to a bit of strength here with more betting coming into play and things of that nature. We're at a good counter trend edge right now, so this $11 level has been tremendous support, and we've seen it bounce off that zone multiple times. Here over the last couple of weeks, we had a very narrow multi-day range, and we've broken it to the upside. So maybe there's some seasonal strength that could take us back to about 15, and in the best case scenario, about 17.5. You know, so this one might have some upside here based off of betting season coming into full swing here. NFL, then you're going to change the tide into March Madness after that. But maybe there's a little bit of strength out of this one. Wouldn't fall in love with this one. Keep it very short term, as this one tends to get hit pretty hard after up moves. Another one here to keep an eye on is EXPE. From a short-term perspective, this one has recovered the recent low here. That's 90 bucks. 90 bucks, and you can see this little range here, and it recovered 90. So to recover 90, you start pointing up to the next pivot high, and that's about where you have a shot to go back to, right? Back within the top of that range. Failed new low below 2-day lows. Very good directional bias right now out of Expedia. You know, if you can only get through this level right there, that's the previous quarter's midpoint. That's about 95, 96. It's 96. If we can get through 96, it starts to open up some upside for another 10 handles up. This could be a very good one here. And the directional bias could remain bullish as long as it can stay above 90. So what if price returns to 90 and rejects? It could be a nice bouncing off point for this one. Spotify is a good one as well. You can see, at least short term. Short term. I don't know about the long term stuff on some of these right now. We just don't know yet how it's going to proceed here. But short term, right here, great market structure, and right there today, recovering the bottom end of the prior market structure in one big day. That's solid. Now, it could always fail. You know, if we fall back and close below 87, 85 tomorrow, it's a failure and you drop back in. Like this, for example. 2 big days up and then this thing gaps down and just crushes folks. But if it can hold the edge, if it can hold that edge that is trying to recover, again, you have all of this space up here. You bisect it and you're looking at 105, then you're looking at about 125. So there could be quite a bit of movement, 15 handles to the upside, 90 to 105. That could be ahead. I would take it first things first. And from a short-term perspective, if it can hold 90 or 80, 87 half, something like that on the pullback, you look for a continuation to about 100 and call it a swing move there. So that could be in play. Now, I do want to give a couple of last long-term candidates. Square. If you look at Square and you look at the weekly time frame, I'm also going to bring up a 35-week ADR range there. Compression. You can see compressed here, 52%. You're looking at big time explosive potential out of this one. I like this one because it has accumulated down at these lows. You can see value has shifted there and is held, or maybe it reached value and it's been sitting there. It's compressing, it's building energy, and holding 50 bucks. This has a shot to go back to 90 from where we are. That would be a plus 20. We're at 70. Can it get back to 90? You know, 90 is also right around where closing VWAP is for last year. It's going to be a little bit of a magnet. But if it can get through 90, that's where it opens up a massive potential move to 150. 150 would be then the next target up. So 70 to 150 on a long-term basis if it can get there. That's also the value high as measured by this current developing volume profile. But if you wanted a long-term candidate to root for here, holding 50, even if we test 50, it could still be a bounce. But right now, looking like it's working its way back toward about 90. If you can get through that level, you start to open up the upside to 150. That could be a great long-term candidate. ST&E is another accumulation candidate that I like. Again, with these accumulation candidates, sometimes, and we found this one last quarter or last fall, sometimes they can continue to play sideways until proven otherwise. You know, it could take a while. StoneCo here has a very nice compression here at value, so it's you know, just chopping around value. At some point, when it's able to reclaim 15 bucks, it could have a very solid move that takes you to 30 and perhaps as high as 45. So those are the next two significant market structure distributions above. We've seen it trade throughout those levels. So right now, to have that compression here, again, don't know when it's going to break. It's an accumulation candidate here. It may never break. But if it can get through 15 at some point here down the road, it opens up the potential for some big time moves back across that range. That's a long-term candidate based off of this compression. And let's go with Pinterest here to finish off. Pinterest is one that we've talked about again since last fall. Great rounded bottom, also consolidating. We're trading around VPOC, and it is knocking on the door. Knocking on the door to potential breakout, just like it did back here finally got that break and it opened up that move. We're not expecting a move of that magnitude, but we could see a move that takes us up to 45, maybe up to 50, and right now we're trading 25 and change, so it could be a very good return for that move if it can just get above there. Now, does it do it sooner than later? Who knows? But again, another good accumulation candidate that could provide some great long-term potential down the road. So watching those candidates here from a long-term perspective. I know we looked at a ton of charts here today, almost about an hour and 25 plus minutes here that we've gone. Again, great to be back in the saddle here for the new year. First monthly market outlook in the books here. I want to say thank you to everyone who joined me here, and I'll be putting out this video for you here very shortly. Please let me know what you think, and we'll be back at it in the trading room again tomorrow morning. Everyone have a fantastic rest of your day, and I'll see you in the room. Take care.